Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the bullish scenario on the 1 hour time frame where we are looking for continuation to the upside, but first a bigger, deeper retracement in wave B or 2. The most common target for wave B is between the 382 and the 886, between 41.8k and 39.1k. Most common target for wave 2 is between the 05 and 786, 41.1k to 39.6k, taken from the low to the high of A or 1. Preferably, price is also making a low in this area after the 0.382 fib time. You can see that the low that we have over here, first of all, actually didn't hit the 0.382, but is also made before the 0.382 fib time, also taken from the low to the high of A or 1. So preferably, we're going to make another low in this box over here. The invalidation for this scenario is price moving below this low, and after a B or 2 we want to see impulsive continuation to the upside in at least one more 5-wave structure for wave C, or bigger continuation to the upside in a wave 3. If we then look at two scenarios that could lead to price moving to the downside in this wave B or 2, the first scenario is a flat structure where we have a 3-wave to the downside in wave A, looking for a 3-wave structure to the upside in a wave B. Most common wave B pattern is a zigzag structure. Common target for wave B is between the 1.236 and the 1.38, taken from the high to the low of this wave A, giving us a target area between 44.3k and 44.6k, which is also in nice confluence with this resistance box here between 43.9k and 44.7k. After this wave B, we are then looking for an impulsive structure to the downside in wave C towards the target area that I just mentioned. Now there's a couple of support areas that are interesting towards the downside. First of all, we have a weekly here at 41.5k, and secondly, we have this blue box here between 39.9k and 40.1k for some additional support. The second scenario to keep in mind is a sideways double combo WXY structure where we have 3 waves in W, 3 waves in X, and we're looking for a 3-wave structure in a wave Y. Wave Y can be a zigzag, flat, or a triangle. It very much depends on wave W. If wave W is a zigzag to the downside and wave X retraces to at least 0.7, it really lowers the probabilities that wave Y is going to be a zigzag to the downside. However, if wave W is a flat structure in a wave A, B, and a wave C, where the minimum target for a flat is the 0.9 Fibonacci, then wave Y can be a flat triangle or still a zigzag to the downside as well. Now, because price here hit the 0.9, it's at least something that we have to consider. If we look at this blue wave X, then you can see a complex counted structure inside wave X as well, another WXY. W here is then a zigzag structure, X also a zigzag structure, and wave Y is then a triangle structure to finish wave X, and then we are looking for a continuation to the downside. If we look at this wave W, however, then as mentioned, we have to look for a zigzag structure, which then means a wave A, B, and a wave C. Wave C is 3 times longer than wave A. Take a trend-based fib extension from the low to the high to the low here, toggle on the 3, you can see wave C is 3 times longer than wave A, which is a rare target for wave C. Also, if we are looking for this high to be a wave C, it means that we have some sort of an ending diagonal because of all the overlap that we have over here. So then we need to count this as a 1, 2, 3, 4 and an ending diagonal in a wave 5. However, you can see the trend lines are expanding, and an expanding diagonal is very rare, especially also in a wave 5. And finally, if we are looking at this expanding diagonal and we would count as a 1, 2, 3, 4, 5 and then a wave 5, right, then also your wave 5 here is longer than your wave 3, but your wave 3 is shorter than your wave 1, and that doesn't really work. That is not according to the diagonal rules as well. So the probabilities therefore are higher that this is a 5-wave move to the upside instead of a 3-wave structure, which therefore lowers the probabilities of this particular scenario. If we go to the most bullish scenario on the 1 hour chart that John thought of recently, then we have a wave 1 or A finished, 2 or B is in, and we are looking for a 3 or C continuation to the upside. Of course, what does lower the probabilities a bit is that the low over here did not touch the 382 Fibonacci from the low to the high and is made before the 0.382 Fib time. If we zoom in to this structure to the upside, which then should be the beginning of a null impulsive move towards the upside, then we have a finished wave 1. We are looking for a wave 2 before then continuation to the upside in wave 3. Most common target for your wave 2 is the 05 to the 786 taken from the low to the high of wave 1. The 886 is a rare target, the invalidation is this low, and time-wise this is still okay for a wave 2. If you take a Fib time from the low to the high of wave 1, then you can see that now price is ranging between the 2 and the 3 Fib time, which is fine for a wave 2. We don't really like to see it move past the 3, and the moment that it hits the 4, that is when it really lowers the probabilities for a wave 2, and the probabilities then increase for this to be a wave B. Inside this wave B or 2, this is then what we are looking for. Here is your finished wave A or 1, looking for B or 2, and then continuation to the upside in a wave C for then a flat and more downside, or a 3 for continuation. In this range, we then have a finished 3-wave move to the downside in an A or W, potentially finished wave B or X, and then looking for a C or Y to the downside, or one more high. It doesn't really matter, as price is just ranging in a typical weekend environment. Now from this high to the downside, this retracement over here only hit the 0.382 taken from the high to the low of the move, which is a less common target for a wave 2, more common target for a wave B, which increases the probabilities that this move to the downside is a corrective structure. It has to be said though that below this low there's not too much support left. Of course we have the golden pocket 786 and the 886, but if I open my horizontals here, it is very empty. This low was made on a daily level, which I now have removed because we hit that level, and the next level to the downside is the daily naked point of control at 42.1k. So it is very important that if price comes to the downside, takes this low and hits the golden pocket, that we see some proof of support, because as mentioned, we have that bearish scenario for a bigger Y to the downside. If we don't see any proof of support, we're gonna look for lower. No? If we then go to the daily time frame, then on the daily time frame we have 2 daily gaps, one gap to the upside and one gap to the downside. The gap to the upside has been tested once here for a bigger rejection, tested twice now, and you can imagine the longer we range here below resistance, the higher the probabilities to move to the upside and fill this gap, where the high of the gap is at 45.5k. To the downside, we have another gap over here, red candle, big push to the upside, and the next candle creating a gap over here, and this gap is sitting between 41.3k and 40.2k, which is exactly in between the weekly mentioned earlier and the blue support box that we have down here. This is the range that we have been in for quite a long time now, right? We had a bit of a deviation to the downside, closed back inside the range, probabilities are high to move to the point of control, didn't yet hit the value area high though, at 44.2k. We are now ranging pretty much on top or above the point of control here at 42.6k, so that is also a level to at least keep in mind. If we look at the local CVD divergences on the 15-minute time frame, then the bearish CVD divergences have now played out as price has taken this low, which is the target for the bearish CVD divergences. We do have bullish CVD over here. However, what I prefer to see is local strength, right? We have a bit of a move to the downside, that's okay, but I want to see local proof of support. So if we see a bit of a bounce, retracement, bull CVD, RSI, stochastic, whatever you use, candlestick patterns, some local proof of support is important because of what I mentioned earlier with the potential for a wave Y to the downside, as it still of course carries some probabilities, even though it might not be the highest probability scenario. Now talking about probabilities on the low time frame, right, on that 1 hour chart, we are still looking for price to dip to lower levels for this wave B or 2, because this low here did not touch the 382 Fibonacci and was made before the 0.382 Fib time. On the micro here, more locally, the probabilities are at the moment higher for a flat structure. The move up from the current low, this move over here, has a higher probability of being an impulsive structure compared to being a corrective structure, as explained with the ending diagonal over here. Now, of course, this then lowers the probabilities that this is a wave W to the upside, and therefore it increases the probabilities that this is an impulsive structure to the upside, which then is the first of a 3-wave structure minimum for then an ABC or continuation in a wave 3. However, by all means, that does mean that I want to see some local signs of support, because below this low over here, I don't have too much support left. Yeah, we have a bit of a golden pocket, maybe a small little gap here as well, and then the daily naked point of control at 42.1k, which is very close to the 886. So there's not too much and too great support down there, so I'd be very patient as I ride here as well to then observe the reaction in this area and see if we get some support from an Elliott Wave point of view, as well as the other tools that I use. And you should use the tools that you like to use, because we still have this scenario to the downside as well. Even though it has lower probabilities, we have to keep it in mind. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.